In this video, traders, we're going to look at 4 common mistakes with stop placement. Stay tuned. Hey guys, warm welcome to you. Thank you for joining me. Okay, so stops are super critical, as we know. Not going to waste your time talking through why we need stops. If you're brand new to trading and you kind of just stumbled across this, searching for stops, go back a little bit and kind of look and see what stops are all about, how they work and why we need them. But come back here if you want to kind of find out more about the mistakes that we make. So traders, if we're getting stopped out all the time or we're giving away too much, these are some of the common things. So 4 common things are, well, first thing, it's the most common by far, is our stops are way too close. I get it. We don't want to risk a lot of money, and the tighter the stop, the more size we can put on, right? That's the logical argument that we're having in our mind. We're going, well, I'm prepared to risk 500 bucks on this trade. And if it's 500 bucks and my stop is 100 pips away, I can only do £5 a pip if we're trading a spread bet. Okay, well, what about if it's 10 pips away? Oh, all of a sudden I can do £50 a pip, same risk on the trade. And we get, okay, that's an extreme example, but we get seduced into kind of wanting to put the stop tighter because it means we can do more size and we're still sticking to our risk parameters, right? Everyone knows we've got to have risk parameters per trade, but this is a false logic. This doesn't make sense because ultimately what happens is you're getting stopped, and your actual risk throughout the week or the month, the quarter is way higher because you're 500, 500, 500, 500. In reality, you need to widen the stop out a bit. So yes, we all want to trade more size. We all want to take more risk on per trade, and we try to think we can get a stop really, really close. Now, listen, there are some setups where you can have a nice tight stop because it's literally the thesis of the trade is this thing's going now. If this little thing doesn't fly now, I don't want it. In which case your stop's right up, you're giving it no room. But they're rare. Okay, it's a real aggressive momentum type play using a bit of tape reading, using a bit of price action. You're playing that type of game. There's something that not so much anymore, but used to happen so much. I'd be looking for iceberg orders on the order book, and bang, when I saw an iceberg reloading, go and check out a video where I talked about iceberg, basically strong buyer on the order book to kind of put it into simple terms. When I saw that, I would literally jump above him, sweep the offer, and then if he lifted, I'd come out. Now that's the tightest stop in the world, and I get them right 50% of the time, but when they were right, whoosh, it would just rip and you could scale out into the rip. So, that's the example of a tight stop. Now, obviously in swing trading perspective, slightly different. So way too close, super popular. My recommendation if you're getting stopped out regularly is just to widen right out. Then we can start to scale in and find the sweet spot, but just undo that kind of constant stop. It's not doing your mental confidence any good either. Number, I've probably got them in the wrong order really, but let's go for this one, all or nothing. What do I mean by this? So many traders, and this is controversial, let me know what you think about this one, guys. I like to split my stops up. So in some setups, not all setups, but in some setups I like to go, right, well, I want to halve my risk on this. If we get below this level, I want half of it. I don't want to take the position out at all, but I want to halve my risk. You might say, okay, here's a good example. You might have a trade that's kind of found a bit of momentum and you bought it. You say, well, if it goes back below the low, I don't want as much position on, but I'm prepared for it. If it to go back below the low before the end of the day and come back up, then I'm playing for that trade. So you might split your stop and you might say, right, half off here, quarter off here, or 10%, 10%, or 90%, whatever. You get the point. You can split it up as you want, but sometimes I think as traders, it's such a binary thing. It's I'm in or I'm out. It doesn't have to be like that. You can be quite gradual and dynamic with your position size. There's your maximum position size, scaling up to it and scale out up to it. Now, of course, we talk about scaling out with limits. We often talk about scaling out with stops, and sometimes just go, right, let me just reduce the risk so I can weather the storm. I like the setup still. The setup is still nice. Example would be this. That's why I drew this, guys, to show you this example. If we've kind of pushed up, let's say we're long on here. Let's say we've kind of bought this and we say, you know what? I want to play kind of 2 trades in one. I have a broader thesis of strength, but I also have a short-term thesis of strength. So I'm going to do my position size. I'm going to split my stop into 2. My broader thesis of strength is, hey, I've bought this flag. Let's say I bought this flag, right? This flag here, and I'm going to have a stop under the flag. But But my broader thesis is one of strength for the whole thing. I think on a longer time frame we're going to go higher. My stop on the second half is going to be here. So you're in here, whatever you're in, your one stop is here and your second stop is here. In this case, you're getting stopped out on the short-term momentum thesis, but not quite yet on the broad thesis. Of course, you've got to look at the whole risk as one and understand how much risk you're placing in the trade as one, because it's still the same market, still the same exposure, but splitting it up into chunks might kind of be the answer of this. If you're getting constantly stopped out to the tick and all this and reversing, just spread it out a bit. Try and play that game. And the 3 too wide. Talk about too narrow and too close. Too wide just defeats the object because you can't scale up and the risk order ratio becomes skewed. Now appreciate longer time frame guys out there, very long time frame guys out there, the stop can be wide. You know, and in actual fact you probably don't even have a fixed stop because you've got so many days that can go against you before you have to do anything. You've got it in your mind and you run it from that perspective. But if your stop is too wide, you can't scale up, especially when it's relative to the risk to the reward you've got on the trade, because risk reward ratio becomes 1 to 1 or something. You know, stop so wide. Yes, you're not going to get stopped out, but you know how many times is it going to go to your target? I knew one guy who used to have a 30 tick target on like a 100-point stop, and he would have a high success rate, but it still didn't seem to do the thing. I mean, listen. There's a fallacy out there, guys, where you go, we've got to have a smaller stop and a larger reward. That's not necessarily the case. I don't think it's a problem having a wider stop and a smaller. It's not my personal preference. Generally speaking, I like to operate from the smaller stop, wider reward. But ultimately, if you're getting the probability of success, you're getting a lot more, and it's outweighing the fact that when you get stopped out, it's not hurting you, and then you put those two together in the equation, you come out profitable. That's fine, but that's a challenging thing to do. And so when you've got a really wide stop, you have to kind of go, right, well, where's the risk on this? You know, at the end of the day, you have to have your position size so small. I think that's a common mistake for many traders. They have a stop way too wide, less common definitely than too close, in my experience, but you know, just watch out for that one. Fourth thing is, you place where everyone else has stops. Guys, this is so important. It's so important, I might even circle it with my purple whiteboard pen for you. This took me a while to learn, and it's something now that I consider to be one of my edges in trading, is that I tend to be buying when everyone else is selling. I tend to be on the other, not for every setup, let's not kind of say that that's the case, because it's definitely not the case. You know, sometimes I'm joining the crowd on momentum, very many times I'm wrong. But I like to try to position myself where the crowd is, you know, vomiting out, if you like, for want of a better term, the last of their trade, the exhaustion type move, where they're going to get stopped out. One of the strategies, that's such a lovely strategy that I had it triggered the other day as well. I thought, I love this strategy. It's a thesis of, hey, everyone's been stopped out waiting for this, and now it's kind of ripped the other way and caught everyone wrong-footed. I just love that. I just love being the guy who's taking the other side where everyone's got their stops. I like to be, but before you get to that point, it's not being the person who is with the crowd of stops. So, you know, we talk about having a stop below the low. Yes, in some circumstances you want that, because if you're trading momentum, you don't want it to revisit the low, so it's okay. But in most circumstances, you want to be the person who's buying when it just dips through the low. You don't want to be there and then having to stop even lower. So if you've got this kind of double top scenario, here you go, double top scenario. This is why I drew it, guys. You've got this double top scenario here, and this one just pokes through the high. If you're interested in taking a short, which I wouldn't advise against, because you've seen some strength, but you see some serious weakness here before it's come up again. A nice wide range between a double top. Double top, if it's too narrow and you haven't got many days in between, doesn't count. Wider range, lots of trice action done. Hits the double top there. So, you know, as a trader, many traders are told to have their stop there and they get pinged. But why not wait and enter your short here and then have your stop here? You know, so you're reversing the psychology. So rather than putting your stop where everybody has got it, either wait until it comes to a level where you know people have got stops. So let me just kind of put this as succinctly as I can, and Hopefully this kind of makes some sense, guys. And let me know in the comment section below if this does. If it doesn't, I'll expand on it a bit more in another video. It's such an important concept, I think. If you have a short thesis for that double top, then wait a little bit more for the people to be stopped to take the trade a little bit higher through the break. Put your own stop loss even higher than that, and that keeps you out of where everyone is, because everyone's taking the double top just there and they're having to stop there. Everyone's taking it here, everyone's taking it here. If you can take your entry where you think everyone will have their stops if they take it textbook style, then you're in a good position. Now, of course, if it carries on, rips up, you've got your stop to protect you. But what happens is you end up getting a good sweet spot. I've digressed slightly on the topic of this video, but hopefully you'll forgive me, guys, because I quite like this topic and thinking outside the box, thinking the other side of who's on the other side of the deal. All this kind of stuff helps you become a better trader, in my opinion. But if we go from the stop perspective, don't have your stop on this peak here. Don't have the stop here unless you've got the conditions, it's a momentum type play. If you're playing a broad mean reversion play, think where's the most stretch point that could go to be negated, and then you go, right, now put my stop above that. So right up here, definitely no longer a double top. But if the price is going to here, it's probably still could be a double top. So think about putting your stops a little bit further, and that means, this is why we digressed, that means bringing your entries a little bit more, wait, rather than getting right in there early, because then you can have the stop a little bit further away, because your entry is a little bit further away. You've got so much more reward. Yes, you're going to miss more trades, but it's worth waiting for. Anyway, guys, we digressed a little bit in this video. Hopefully that's helped you. If it has, thumbs up is appreciated. If you like this kind of stuff, give us a comment in the comment section below. Let me know what you like, what you'd like to learn more, and also our channel sponsor. There's a link to those guys in the description below too. So 4 common mistakes with stop placement. Take care. Bye bye.